Vaibhav. In today's session, we are seeing the gold consolidating closer to the levels of US dollar 1,870 per ounce. And looking at its current bullish price trajectory, it looks like that it is not going to stop before it gets to the important level of US dollar 1,900 per ounce. So in this session of market movers, we will be looking at the technical aspects and if there are any trading opportunities emerging from its current technical outlook. So let's get started. If we consider the trading context for the day, we are seeing bullish momentum prevailing in the most of the non-USD financial instruments. Here I'm talking about the major currencies and to some extent the equities also. Equities, you can say that this is sort of retracement after continuous slide which we have observed for last couple of sessions. If we consider the US equity indices in particular, we are seeing the positive sentiments there as the US session has started. We are seeing gains of more than half a percentage point. For Nasdaq, the gains are more pronounced, closer to 1 percentage point. And earlier in the day, during the European trading hours, we have seen the equities rise. So you can expect this turnaround to last maybe at least for a day or two. And these sentiments are kind of giving the indication that even though we had some talks of possibility of changing Fed's monetary policy, but even that talk is not having a negative impact, and we can infer to some extent that the gold is not going to stop its run higher, even though the higher inflation is here, and also the talk of town is the possible implications for the central bank policy. On the data docket, we didn't really get much market moving releases in the day. Earlier in the day for the Australia, we had employment numbers, and there we saw that unemployment rate has slightly gone down to now stand at 5.5%. This data was for the month of April, and we didn't really saw much jobs being added, but I think this decline which we are seeing is mainly because of lower labor participation. And straight away moving to the US, here also the labor market is showing signs of continuous improvement, and for last week, the week ended 15th of May, we are seeing that the jobless claims have now declined to 4,000 sorry 444,000. So that's quite an improvement compared to the prior reading of 478,000. And this trajectory I'm expecting to hold good for next couple of weeks also. And given the strength in US economy, we can expect more and more employment opportunities to be generated there. And that is going to push the jobless claims lower. Now let's shift our attention to the technical outlook. First, we will consider the gold, and after that, we will see how the weakness in the USD is likely to impact the USD JPY's price trajectory for next couple of days. Let's start with the gold. This is the daily time frame chart, and here we had this double top kind of formation followed by this double bottom kind of formation in the month of March and early April, and after that this reversal has brought the gold closer to its prior swing high. We are, I think, 6 to 7 percentage point away from these highs, but looking at its strength in this bull run, I am expecting in due course of time gold to get closer to these prior swing highs, and it has now showing the signs of getting past these prior swing highs. In last couple of days, we had this consolidation closer to the US dollar 1,850 per ounce level, and after that we had this breakout. Yesterday, it kind of moved sharply both up and down and went on to close just on the levels where it started the day. And today it has picked up from where it left yesterday, and it is now continuing to run higher. And I think in near term, for next couple of days, it will be better for us to continue to look for buying opportunities. Of course, given these substantial up move which has already taken place in its price formation, it will be difficult for us to look for optimum trading opportunities, and we will have to rely on the lower time frame charting and also keep our stop losses and target price fairly sharp. So if we want to go for the trading opportunity, I think we will have to use these first sorry, not first, the second and third resistance of this month's pivot point series. I'm expecting these second resistance of this month's pivot point series, which was breached last week, to act as a near-term support. In yesterday's session, we saw the price reversing after it got closer to this price area. Earlier, we had these consolidation highs, and on the price action front, we are likely to see these acting as the near-term support. So both these technical formations are suggesting that we are likely to see the price level of US dollar 1850 per ounce level acting as a strong support for the gold in near term. So as long as the gold price is holding well above this price area, I am quite confident that we will see the gold continuing to move on the higher side. So our job is to get the entry for the long trade as close as possible to the support zone. And on the higher side, this third resistance of this month's pivot point series, which is there around US dollar 1900 per ounce, to be reached in next couple of days, if not today itself. And regression curve is also pointing northward. So both of these technical formations along with the price actions are quite conducive for the long trade, and the bullish sentiments are all there to see. So if we want to look for the trade in today's session, I think the near-term support in intraday has been this US dollar 1860 per ounce level. This is where we have seen the gold consolidating and getting the bullish momentum back. And now that we have gold trading closer to US dollar 1880 per ounce, it will be difficult to ask for the gold to again correct and then consolidate at least for a couple of hours before we can think about getting the new trade entry here. So if you haven't gotten the chance to get involved earlier in the day, I would still say that you should be looking to time the entry closer to this prior swing low, the immediate support zone, while keeping the stop loss anywhere below the yesterday's low. That is going to cut down on the possible losses in case our anticipation goes wrong, and that is the reason why I'm stressing on the need to buying closer to the support area. And on the higher side, we can expect this high established in last session to be breached, and our target zone, which is there around US dollar 1900, to be reached in next couple of days. Now let's see what's in store for the USD JPY. This is the daily time frame chart, and after making the high closer to this prior swing high of around 109.75, we have seen the USD JPY continuing to slide, and even yesterday's rebound is not helping it to sustain the gains, and in today's session it has given up all of yesterday's gains, and it looks like that it is going to go on to touch this low form closer to the 108.5. So in this session of market movers, we will be looking for trading opportunities to go short in the USD JPY. So if we want to look for the new entries, we will have to target the entry closer to the resistance zone, and if we take a look on this price formation, the near-term resistance lies closer to the central pivot point, which is there around 109.20, and that's the price area which is offering the excellent risk-reward ratio, as our stop loss will be fairly sharp. And now that this price is almost 40 to 45 pips away from the current valuation, I think if we can get the entry anywhere closer to 109, that should also be good enough, while keeping the target price on the lower side closer to these immediate swing lows around 108.50. If you consider the regression curve, it is pointing on the upper side, but now that the price action has moved in the lower band along with these other technical formation of pivot point series also turning bearish, I think we should overlook this regression curve formation, and unless and until we have any significant breakout above this central pivot point, the near-term trajectory for the USD JPY is likely to remain bearish. So if we want to look for the trading opportunities in the today's session, then this convergence zone of 50, 100 and 200 SMA, which is there in the price band of 109 to 109.10, should be an excellent proposition for initiating the new trade. And the stop loss can be kept just above this immediate swing high, the high formed in the earlier hours, in the initial hours of today's trading session. So that stop loss is going to be around 109.30 for entry anywhere in the price band of 19 to 109.10. And on the lower side, we can expect the retest of yesterday's low, and even below that, the levels of 108.50 can be expected to be reached in a day or two. So that's my assessment of the USD JPY, looking at the all-round weakness which we are observing in the US dollar, and as a result of that, the JPY is likely to gain. And before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. To provide your valuable feedback, and if you have any query or any other share, you can write to me in the feed- feedback section. Thank you all for joining in. Do subscribe to the Webinar channel. See you next time. Till then, goodbye.